Your first question comes from the line of Donovan of Schaefer. Please go ahead.
Yes. Hi, guys. Thanks for taking the question. So I want to first talk about the Hypertruck ERX, doing those 30 units. Sounds like you said you feel pretty comfortable, like you're on track. But, being there at the Investor Day and kind of seeing the lifts and everything and the crews working on it, I'm just curious, there's a learning curve with anything like this, and this is kind of the start of being in like production mode on these. So is it at a point right now where you're already, the crews that are doing this or the teams that are doing this, they're already kind of at a run rate where if they just keep pumping them out at the current pace, you'll hit those 30 units? Or is there kind of the expected or baked in certain amount of, every day they get a little bit better, so it's not strictly kind of a linear improvement, and so there's a certain amount of just expected kind of timing and improvements that'll help you get to the 30 units. Just kind of curious of the nature there, if you can talk to that.
Yeah, it's a good question, and you had the opportunity to actually see it all firsthand. But we are in the ballpark right now from a production standpoint to be able to achieve those 30 with no drastic changes or no big changes at all. And so from that standpoint, your other comment of we are getting faster at installs every single day. Actually, the takt times that the teams have been able to improve have been quite impressive, and we don't think we've gotten all the time out of it yet either. So from that standpoint, we have high confidence in the ability with the team that we have, the facility operation setup that we have, to be able to achieve those 30 units by end of year. The other thing I'll note is we are also in parallel path teeing up mod center ability and capability to be able to do Hypertruck ERX installs as well. And so that's going to allow us to be able to go scale volume as we have assistance from mod centers.
Okay, that's helpful. And then second question is around ASPs. So, before you talked about it for the Hypertruck ERX being kind of in the high 300,000s, I'm curious, with the cost increases that you've seen, are we moving to where that may cross over to hit the kind of 400,000 mark, or not? And if you can give any color around how we could think about the day cab. As I understand it, you can actually even do a smaller battery and still get the full full credit on the day cab. So if you can just, if we can get kind of a rough sense of if it's 100K lower or 50K lower, or how the day cab would kind of compare.
Sure. So let's first start with the sleeper cab variant of it. So as you mentioned in previous call, we've expressed high 300s, and that is still where we're targeting. Now, that is already taking into account the benefit that will be received from the Inflation Reduction Act, that 40,000. So still on track for that high 300s. With respect to the day cab, it's still too early to put numbers on that in terms of cost and price of that system. As you mentioned, we are targeting some improvements. So one is just obviously the shift of going from a sleeper truck to a day cab. Day cabs are conventionally less expensive in the market. And then we are also looking at smaller battery pack while still being able to achieve that ACF credit. Even looking at some fleets that push us towards, reducing the size of the tanks on the vehicle, just because the range of a day cab is less than what a sleeper is. So more to come on what the pricing of a day cab, though, would actually look like.
Okay, and then if I can squeeze just one more in on the stationary Carno generator. In the release, you talk about having demo sets deployed in 24 and also generating revenue. So I'm curious, are those kind of two separate buckets or the same thing? Would you have one set of demo units and a separate set of units that are out there generating revenue, or is it kind of like you'd deploy some of these and you call them demo units because maybe the revenue model, you're selling the electricity, but you keep ownership of the unit and it's still sort of helping to prove out the concept, and it allows you to show it off to people and stuff like that? Would they be the same units or kind of two separate groups or batches?
I think best way to look at it would be the same units. Now, obviously, as we go deploy these, and as I mentioned on the call, we are in discussions right now with the likely early adopter of these. We'll be working with each one of them and looking at what their potential long-term use case is, and then structuring these agreements appropriately. And so I think from your standpoint, though, look at them as in the same bucket. Our goal is these early units that we'll be deploying in 2024. We will be able to generate revenue off of those units, and then see that as a great kind of seeding into the market to be able to then hopefully go scale volume from there.
Okay, great. Thanks, guys. I'll take the rest of my questions offline.
Your next question comes from the line of Steven Fisher of UBS. Your line is open.
Thanks. Good morning. Just to follow up on that Carno question, I know you plan to generate revenues in 2024. Can you just give us a sense of the path and timing to gross margin positivity on that Carno stationary generator? Is that something that you sort of even have in your line of sights at this point, or is that something that's much further out and needs bigger scale?
Hi, Stephen. This is John. Hey, great question. We're excited that next year, even though we just acquired the Carno technology, that we have an opportunity to put some units in demonstration service and even get some revenue for them. We haven't projected yet or shared our expectations in terms of gross margin, but we don't think as we ramp up Carno, we'll do the demo units, but then we do expect that we'll be able to be ramping up sales in 2025 and beyond, that there's not a long pathway to positive gross margins, but I wouldn't want to give you any specific numbers just yet as we kind of work through the engineering on it. But we think Carno overall is a pretty good story, and that story is not a long one in terms of getting to the being able to forecast those things, but we're just not quite ready yet.
Got it. That's helpful. And then in terms of the day cab, how does the development of that product affect your cash burn?
Yeah, so I'll start it off, and John can chime in more as well. But so it would be utilizing a lot of the same team that we already have in Austin, Texas, taking the knowledge and a lot of the development we've already done on the sleeper truck, carrying it over to a day cab. But as we mentioned, there'll be some improved, cost benefits, some weight benefits onto that solution. So there still is engineering spend, and I'll let John touch on that.
Yeah, I've been trying to share. We talked about this a little bit at Investor Day around our cash or expense outlook for next year, and I did that in the context of what we spent the last couple of years. And also, if you note and look through the comments that I made today about our expenses and taking out some of the unusual costs related to R&D component expensing, that we're flattening out. I projected this at the beginning of the year that SG&A would be flattening out, and R&D is looking to flatten out too, even with the addition of Carno. So as Thomas mentioned, as we complete the R&D work on the sleeper truck, those people will be shifting over, and that money that we had spent in the past towards sleeper truck development will shift over to these other things, including the 15-liter and the day cab. So I guess what I'm getting at here is, I don't want to forecast too precisely, but we don't expect a big ramp up in spend or a big additional cash burn to get the day cab. It's the next follow-on product that we're really talking about there with the day cab and the 15-liter.
Okay, terrific. Thank you very much.
Your next question comes from the line of Bill Peterson of JP Morgan. Your line is open.
Hi, good morning. This is Mahima Kakani on for Bill. Thanks so much for taking our questions. Maybe to start, could we get some clarification around what type of component issues you've been seeing that's led to delays in building verification vehicles, and what the expected, if any, impacts would be on your deliveries later this year for the ERX?
Yeah, so I think what we saw was really components that were coming in, ensuring that they met the proper quality specifications that we were laying out to our supply base. We saw that there were some deficiencies there, and then we were able to work with the suppliers and make improvements in the products that they were producing for us to be able to meet those standards. So things like sheet metal, making sure the tolerances are correct, the paint specs are correct, as well as wiring harnesses, making sure they were built to both the spec that we had outlined and to make sure that those specs were going to meet the harsh conditions of the roads out there. That's really what led to some of those delays. So I think our team had done a great job in forecasting out, when we needed components and supplies. Unfortunately, we just saw that some of the material that was coming in didn't quite meet the specifications and the demands that we were looking for it to meet. And the supply chain base worked very well and diligently to then correct those issues. And I'm pleased to say that we're now in the process of building out those remaining pre-production development trucks.
That's really helpful color. Thank you. And then maybe a second one. Can you tell us a little bit about your philosophy on building up ERX inventory versus getting these initial 30 trucks to customers? Like, is there a certain, level of inventory that you feel comfortable having as you ramp up in 2024 and beyond?
Yeah, so the focus right now is obviously those 30, both securing the orders and then getting those trucks built out and in the hands of customers. As we look at 2024, one of the things that we're looking at closely is how does these extended fleet trials go? How do these initial adoption of units go, the Founders units later this year, and using that input to really look at what the 2024 volumes are expected to be. So we plan on coming back with further information on that as we get a little bit further ahead. But as we mentioned on today's call, we think we're weeks away from being able to start these extended fleet trials, which for many fleets this is kind of their final gating item before making order commitments, right? And that's expected. That is something that I think the industry is demanding, and rightfully so, is they want to actually experience technology in their operations first for a period of time before they're willing to place order commitments. And that's something that is not uncommon to just Hyliion.
Okay, great. Thanks so much for taking your questions.
Your next question comes from the line of Andres Sheppard of Cantor Fitzgerald. Your line is open.
Great. Thank you. Good morning, everyone. Congrats on the quarter, and thanks for taking our questions. I just wanted to maybe start off by clarifying the cadence of the 30-unit delivery for this year. Should we expect the vast majority in Q4, or might there be some material deliveries in Q3? Just trying to understand what that breakdown might look like. Thanks.
Yeah, so later this year, so Q4 target. So we'll be going through the builds of trucks. We actually started the first build of a production truck during Investor Day, and then we're looking at more the Q4 timing of when deliveries will start taking place. And just to walk through the process. So what we've lined up is we'll be sourcing decontented chassis from PACCAR Peterbilt. We'll be then doing the upfit of our powertrain technology in Austin. As I mentioned, going forward, we'll also have the ability to do that at mod centers as well as in Austin. And then that vehicle will go back to PACCAR, go through final end-of-line certification. The VIN will be put on the vehicle, and then it would be ready to go out to customers. And that will enable these vehicles to also achieve that ACT credit that we've been talking about. So that's the process, but in terms of when the deliveries will get back to fleets, we're looking at Q4.
Got it. Okay, that's what I thought. Thanks, Thomas. And maybe a question for John here is in terms of gross margins, I know we're not providing too much visibility around those, but is it realistic to target positive gross margins at some point throughout 2024, or is this perhaps more of a 2025 story? Thank you.
Yeah, I think it is still a little bit early to tell. As we noted, we're still working on our order book for next year, and that's contingent upon these extended fleet trials that we're about ready to kick off. And so, volume drives costs, and so getting that order book in place, and also some of the design changes we're working on, and also working on getting the powertrain getting to the point where we're selling powertrains. Those all play into our expectations for timing on gross margin. As we noted, we're not expecting big losses right out of the gate, but we do expect some red ink. So it's a little bit early for us to share expectations there because of all of those things. So but you can be sure we're working on it very hard.
Got it. Okay, thanks, John. And maybe just one last one, if I may. You mentioned that given your current liquidity, you don't anticipate any capital raises this year, but that you will remain opportunistic for next year. So I'm just wondering if you can maybe elaborate a little bit further as it pertains to next year. How are you thinking about potential capital raises? Are you leaning, towards equity or debt, or one way more than another? Just trying to better understand how you are thinking about it as it pertains to next year. Thank you.
Yeah, sure. I've shared at Investor Day that we're slowing cash burn. We've reduced our estimate for this full year by $50 million from where we started the year, down to an expectation that it would be no more than $50 million. We still feel good about that. We're trying to keep it as low as possible to extend our options, right? And so you could extrapolate what we showed today on the slides and say, hey, we don't really need to raise capital in next year in addition to this year. The point about being opportunistic is, hey, if the opportunity arises, we've seen some stocks of some companies, increase a lot due to better prospects and so on. And, if that were to show up, we would probably look to the capital markets. I don't see, I see that being probably more of an pure equity type of a play versus, anything else. So again, the whole idea is to give us some flexibility to execute on our strategy. As Thomas outlined it, we see big opportunities out there. There's a little bit more work to do to get a day cab, get the Carno opportunities, figure out the best way to build the sleeper cab ERX. So all of those things, and then the other strategic opportunities that we hinted at today, just keeping open-minded about what those might look like and how they might unfold. Those are all things that are playing into our capital forecast. I think the good news is we have a lot of flexibility. We've created that flexibility and runway for ourselves, and we're not just assuming that things are going to turn around in 6 months or so. So we're being very strategic about how we think about using our capital and how that aligns with our strategic plan. So again, we've got flexibility. We're really watching it carefully, and we'll just see how things go.
Got it. Okay, no, that's super helpful. I appreciate that. Thanks again. Congrats on the quarter, and I'll pass it on. Thank you.
Thank you.
Your next question comes from the line of Mark Delaney of Goldman Sachs. Your line is open.
Good morning. Thank you for taking my questions, and thanks for all the details on the Carno. I believe you mentioned in your prepared remarks that some suppliers have been increasing prices, and therefore the BOM cost of the ERX could be higher than you'd been thinking earlier this year. I'm hoping you could clarify a bit more on that topic. Are you able to give us a better sense of the magnitude of the increase that you're now thinking about in terms of the ERX cost? And you also maybe give us a sense of the breadth of suppliers doing this. Is it a single component or two that's driving the increase, or is it a broader based set of changes?
Sure. So I'll first start with kind of the overall theme for maybe it's even more than a couple of years, is just significant component price increases. And, what we shared on the last earnings call was one of the reasons that it drove us to let's go back and revisit these founders agreements. We need to pass some of those price increases on to end customers. That as we shared on today's call, even since then we've seen some more component increases. You mentioned that those are in the thousands of dollars range, and so what we're seeing is that price increasing from suppliers is not lightening up just yet, and so From that, I don't see that it's going to change our pricing at this stage, but we just wanted to add that color to the market of, still seeing price increases. And this is not unique to Hyliion by any means. One of the things that we've seen is as others are out reporting earnings, some are taking very significant losses on shipping out vehicles. And so, John touched on that a little. We don't see that we're in the same boat. We are going to be operating at a loss on these initial trucks, but we'll be working diligently to pull that cost out of the product as we go forward here. And then we see day cab as another market opportunity for us to go after as well.
Mark, I might add to that, as people would expect when you've got, a new industry forming and a lot of, especially in the Class 8 market that doesn't have a lot of volume yet, you're talking about things like battery systems and e-axles and so forth. The industry really needs to mature and get to the higher volumes. And I think naturally you'll see pricing coming down over time. It's just, we haven't yet reached that volume-driven inflection point on pricing, and we're dealing more with the inflationary sides of it that are working the other way. So it's just, part of it's time, part of it's design, part of it's, procurement and so forth. So those are the things that are affecting us.
Yeah, no, that all makes sense, and appreciate the color. Yeah, I guess to follow up on that topic. I mean, as you're thinking about price cost, in terms of some of these factors, what you can pass on and what Hyliion may have to absorb. Do you think that price cost dynamic gates production in 2024? I realize you're still formulating the exact build plan as you said in your prepared comments, but curious if the potential losses maybe limit how many ERX units in 24 you may want to manufacture and sell. Thanks.
Yeah, Mark, that's a great question, and we've actually addressed this a little bit in the past. Just recently, that as you think about the changes in, I'll call it the shift in strategy that we outlined a quarter ago, where we said, hey, we really want to control and meter the ramp up of this product because of all of these challenges, and you add to that we see all the opportunity around the day cab and Carno and so forth, that we definitely want to get our trucks out there, get miles on it, prove out the technology, powertrain technology and reliability. We do have this change where the 12-liter engine that we have won't be certified in California next year. That doesn't mean we can't sell trucks. We'll continue to sell them, but we're not rushing to put out trucks as quickly as we were maybe a year ago or even further back, because that's not necessary to get where we want to be, which is to have like I said, the day cab truck, working on design changes that'll take costs and weight out. So 2024 will be a year we're going to continue to sell, but it's not a strategy where the more we get out there the better. We want to be very thoughtful about the volumes and the ramp up as we work on these other things that we've outlined today. So again, that will kind of help us really in all areas of proving out the product, managing our capital, cash flow, and those type of things. So yeah, so you might say there could be some metering of that, just depending on those factors, the interest level, the price level, component level, and so forth, as we get through next year.
Understood. Thank you.
Again, if you would like to ask a question, press star 1 on your telephone keypad. Your next question comes from the line of Chris Phibbs of CP Investments. Your line is open.
Excellent. I got to take that. Hey guys, can you hear me okay?
Yeah.
All right, thanks. Regarding sales, as far as your plan for the market, are you guys planning on having like field sales, like reps in the field, or mostly working with like OEMs, or doing more of like a online presence, or a combination of all?
Sure. So it's definitely not an online presence type of a market. The commercial vehicle space is very used to meetings in person, face-to-face discussions about how they're going to be speccing their trucks. What's conventional for tier 1 suppliers in this space is that you do have a field sales team, but you're also working closely with the OEMs. So you want to go out and educate the fleets on your technology and on your solutions, so that then as they're going and placing brand new truck orders through their dealers, they're speccing your product. And so that will be our goal as we move to that model of being a powertrain provider as opposed to the full vehicle seller. And that is something that is very customary in the industry and a model that we look to slot into.
And do you guys currently have any reps in the field, or when would you start actually ramping up sales reps?
We do already have sales reps that are doing exactly what I just mentioned, as well as right now in the beginning, we'll be transacting the entire truck sale, but then looking to quickly move over to selling the powertrain as opposed to the entire vehicle.
Awesome. All right, thank you.
There are no further questions at this time. I will now turn the call over to Thomas for closing remarks.
Thank you, everyone, for joining today's call, and also appreciate everyone who had attended in person or virtually during Investor Day. For those of you who haven't, strongly encourage you to go to our YouTube channel and watch that presentation. It's a couple hours long, but it gives you a great amount of detail both on the Hypertruck powertrain solution as well as the Carno. So thank you for joining today's call.